Hello, everyone. Welcome to another Wednesday with Wendy. It is the end of the month and also the end of our series on how to pay less in taxes. We're going to recap today 5 strategies that we've been going over and also talk about an update to the BOI reporting requirements. Before we get to that, I'm Wendy Kane. I'm the owner of Kane Accounting and Financial Coaching. I do bookkeeping and payroll for independent contractors and small businesses so that you can have peace of mind at tax time and throughout the rest of the year. Okay, let's recap. Back on February 19th, I started this series. There are 5 ways that I know of to pay less in taxes. And some of them are ways to actually owe less. Some are ways to just not have to pay as much in April, or to pay nothing in April and actually get a refund when you file your taxes. So back on week 1, the first suggestion was to keep your QuickBooks up to date. That means you need to be entering transactions and reconciling them, the bank and credit card accounts, every month so that you don't get behind. I recommend setting aside some time every week to enter everything, and then, of course, once a month to reconcile all the bank accounts, all the credit card accounts, and make sure everything that happened in real life is in QuickBooks and everything that's in QuickBooks actually happened in real life. That will go a long way towards getting you the correct numbers that you can use to make decisions. If you are not sure that you have the time every week or every month to be sitting down in QuickBooks and doing all that work, give me a call, send me an email. That is what I specialize in, and I would love to take that task off your plate. The second week, we talked about business expenses that are deductible. There is not one long list of every single business expense that the IRS allows as a deduction. 2 words you can remember to kind of get an idea about whether this expense is deductible or not are ordinary and necessary. As long as the expense that you have is ordinary for your industry and necessary to carry out your business, it will probably be deductible. The ultimate authority is the IRS, so I can't say 100% yes or no, but we can get awfully close by following those 2 words. In week 3, we talked about paying quarterly estimated taxes, how to pay those, and when. The due dates are a little weird. They're not the same as corporate quarters. So you'll need to go back and watch that video and click on the link to find out the actual due dates and also how to calculate those. But if you pay some estimated taxes in throughout the year, then you're not going to owe those taxes come April and tax time, and it will help you owe less. And maybe if you put in too much, you might even get a refund. Okay, in week 4, I said to meet with your tax preparer. What you want to do is meet with them in July or August, somewhere over halfway through the year, when the year's over halfway done. And then again in the fall, like in October, November, December, whenever they have time, you want to meet with them and look at what the year looks like so far, because then you still have time this year to make some changes so that you don't owe a lot of tax come next year. What we don't want to happen is for you to show up at your tax preparer's office in February, March, April, or even in the summer if you're on extension, and tell them things for the very first time and say, I hope I don't owe a lot of taxes, because we can't help you by that point. Once the year is done, there you can't go back and redo things for the previous year. So get in touch with your tax preparer early, and they can help give you some strategies to make sure you don't have a huge surprise come April. Okay, and then last week, the 5th strategy was to pay more taxes in through withholding. Now, if you are a single owner S corp and you're on W-2 payroll, you can increase withholding that way. If you are married and your spouse has a regular W-2 job, you can increase withholding over there. If you're a single member LLC or just a sole proprietor, you don't have that option since you're not on W-2 payroll. But if you are, or if someone in your household is, that's a great way to pay more in taxes so that come April, you aren't looking at a huge tax bill. Okay, now for the update you've all been waiting for. I hope this is the last update I ever have to do on this topic. Um, Surely it will be, but I don't know. They keep changing things. Beneficial ownership information. This was a new requirement that the FinCEN, which is the Financial Information Network Crimes Enforcement. Now I just butchered that. FINCEN. You can Google it. I can't remember what it stands for at the moment. They instituted a requirement for all businesses in the US from a sole proprietor or single member LLC on up to register with FinCEN and tell them who owns your company. And if you didn't do this by January 1st, there were going to be penalties of $591 per day that you didn't for however long you didn't file. They have finally come back. It's been back and forth, in and out of court. It's on, it's off, it's on, off, the new deadline, all that. On March 21st, they finally decided to limit the BOI reporting to only foreign companies. So if you are a US company registered here with some Secretary of State in the United States, you do not have to complete the beneficial ownership information reporting requirement. That's what it is right now. I hope that's the last we ever hear this because it was going to be a huge burden for small businesses. And I personally don't think it would accomplish their goal. But again, I'm not involved in international politics and business, so I don't know if it would accomplish their goal. But to me, it just looked like a lot of extra record keeping for those of us down here who are just trying to make a living by having a small business. And once, we don't want to work for somebody else, we want to work for ourselves. And then they're piling all this other reporting requirements on top of us, in addition to all the other things we have to do as business owners. So as of today, you no longer have to do that. If you've already filed like me, well, you've already filed. You don't have to worry about it either way. But if you haven't filed, you don't have to, and you won't be penalized for not filing. Okay, if that changes, I will update you. But otherwise, that's our Wednesday with Wendy for this week. Tune in next week. I'm going to start talking more about the W-4 and withholding. And remember, no one is born knowing how to do this. It is not taught in school. If you are feeling overwhelmed, you are not alone. That's why I'm here to guide you. If you found this helpful, like this post, follow me on Facebook, and head to my website to sign up for my newsletter. Y'all have a good day.